Hey everybody, you're watching another episode of Winston Walks. My name is Winston and I take walks. I'm here based in Toronto. We're walking right now along King Street West. We just passed in King and King and Bathurst, yeah. Yeah. Yeah, it's you can see it kind of just rained a bit here. The temperatures dropped here in Toronto. As you can see here, got some nice restaurants down here, a lot of bars. There's the kegger there, right? Really nice. What I also want to talk about as well is recently with, so you know, a lot of the videos that I put out so far, we talked about the theme in Canada, and I'm pretty sure it's common amongst other countries, is that inflation is still an issue, right? So we talked about in our last video about 2% inflation in Canada, how really a lot of the components are moving up now. Again, food inflation is a big issue. The restaurant prices here are a lot higher, and I think at some point in the future what I'm going to do is also take you guys kind of into a supermarket and just kind of display some of the prices down here, because they are crazy. Oh, porchetta's right here. This place is good. Yeah. Oh, here's another condo going up. It's funny, actually. Another thing with that is that, in every industry or asset market that I deal in, that if you have an oversupply of something, right, typically the price will go down. And it's interesting because right now in Toronto, we have an overabundance of housing, frankly, because I'm sorry to say, like, there is a correlation between low rises, freeholds, residential homes, and condos, because number one, the boomer market. So baby boomers obviously are getting older. They're the ones actually that have these houses. They're going to be selling these off because realistically they have a lottery ticket in hand, right? So if you start seeing that lottery ticket disintegrate, okay, or go down, you're going to cash it in. You're not going to just let that money go away, especially if it's more money than you've more money than you've ever had, right? So that's the first thing. But we've got a lot of condos being built. They're constantly going up. I know that recently with developers, because no one in their right mind is going to pay pre-con prices. So if you folks out there aren't, right here too is another one. There's like multiple condos in this unit, into this space here. If you folks aren't familiar with the way pre-construction works, you're paying a future value of the price of that unit. So you're not paying the price today. You are paying the price multiplied by I guess an inflation or the increase rate multiplied each year. So if it's 5-year period, that would be, let's say, I don't know, it's 6%, let's say, then you're paying a 30% premium, right? So right now, if you're a buyer in this market, why would you ever pay 30% more for a unit you can just buy on, like, currently? I know the argument was new versus old, but let's be honest, a lot of these condo corps aren't funding it properly as well. People are getting hit with maintenance fees, maintenance charges, increases, etc. So anyways, so we've got a lot of condos in this city that haven't been sold, and they're still building, but they're not starting new projects because, frankly, there is not the demand, right? Rents are going down. I know that's not common in all of Canada, but in the more expensive areas like Toronto and Vancouver, we are having a decrease, in those rental prices. So the rental income really just doesn't make sense for people to pay to buy a unit and rent it out, and really to lose money, right? Now we've other now, the government here. So there is prospective an election next year. So what they're trying to do is they're trying to kind of reinflate everything. So we talked about the program with the 1.5 million for first home buyers that they can borrow. Granted, you got to make a lot of money for that. We've talked about a 25-year amortization as well. And to top that all off now, the federal government here is now also offering a $250 check and what's called a GST, so it's about 12% a tax on certain items, but a holiday for 2 months, right? And in total, it's going to cost us $6 billion. So, our country is in a big deficit situation. So all we're really doing is just writing a check. We're just borrowing basically to spend our own money, right? And again, it's not political, but we're coming up now to Spadina and the King here. As you can tell, again, it just rains, so there's not many people here.
It's a Monday night.
It's a Monday night too, so not like a Saturday or a Thursday. But yeah. So when you think about it, we're just tacking on inflation on inflation. It doesn't make sense to do that now. And again, so from an investment perspective, if you folks are, so 2025 is also going to be the first year of that mortgage cliff that we talk about, where a lot of Canadians are going to be renewing their mortgages. So again, you got to watch the fixed bond Canadian yield. So I think usually the 5-year. Oh, this is not good yet. So you got to watch for that affects the fixed rate mortgage. I know I've heard brokers telling you to go variable. Just be careful with that. Just understand that there's risk with that, because with all this spending, and again, we talked about the fact that the inflation rate is actually still going up. It could be actually reaccelerating. If you good example, you actually want to check. Look in the 1970s and 1980s. There was a double spike in inflation. The central banks thought they had killed it, but it's not the case. Okay, so we are here now. King. If you look down here, it's all condos. It's all condos here, and they're still building up more. You okay?
Yeah.
Okay. Right, and there's not much infrastructure down here. Like, basically, you've got to be I don't know. I mean, there's no schools or down here or anything like that. There's no, the infrastructure is pretty bad, frankly. They just keep piling people up here, hoping, to collect property taxes too, and everything are about to go up as well. So, but just keep that in mind in terms of the inflation rates that are going up. Now, in terms of also so right here too, got another one going up. So in this city, when you just keep walking around, you just keep running into more new condo projects. So I mean, they're going to be slowing down the immigration, right? Frankly, though, also they said they want to be more selective of the immigrants that they want to bring in. So, frankly, higher skilled, or they have more money, because a lot of the immigrants that have come here, they don't have the money to buy these condos. These condos are not affordable, right? They don't have the money to rent them. never mind buy them. So, you know, I don't know how that's gonna work.
Other places you're different.
This is like multiple buildings here.
I forgot like these. Yeah.
So it'll be complicated because in the next few months, especially when the government rules kick in, we'll probably see the activities going up already. So then here's another thing too. When you're the Bank of Canada, if you're Tiff Macklin, okay, when you think about it, okay, so you've cut rates, okay, and they're meeting on the 11th of December. Probably gonna maybe cut a quarter point. The 50 is probably off because the inflation's going up. You've got the government that's piling on stimulus, right? You've got a weakening Canadian dollar. Okay, though it has sort of it's fallen, but it's starting to at least base a bit, but it's still not a great level, right? You know, what do you do if you're him? You know, do you are they going to pause? Like I said, their wording is going to be very valuable in the next meeting. They start talking about, maybe we're just going to... Oh, look at that Wendy's, eh? That's kind of a new Wendy's. We usually come down here, folks, for when we leave the J games. So that's why, just new things that I see. But if you're Tiff Macklin, what are you going to do? Are you going to start raising rates? I mean, because inflation's going to start accelerating again. And you got to remember, those commodity prices are not just a function of, Canadian demand, right? It's international demand. Everyone's going to need them again, right? Though what was quite interesting was the Bank of China, I believe, was their central bank in China. They are actually becoming less aggressive on their stimulus because their currency is weakened due to the US dollar, and they want to avoid that inflation punch. So that's why you got to be careful, folks, when you're going to renew. Don't just blindly throw it into a variable because someone just tells you, oh, okay, well, they're just going to keep cutting rates. I mean, it could be wrong. Like I said, do your work, but, again, on top of the federal $250 check, you've also got a provincial one in Ontario. They're going to do a $2 check for everybody as well. So lots of stimulus, and as we saw from the pandemic, when they were giving the CERB checks here, right, and the stimmies in the States, right, free money in pockets of consumers is extremely inflationary. So what we're going to see, they're just looking for a short-term boost because they got an election, and longer term that could turn out to be a disaster. So just be careful in terms of when you renew your mortgage here. Oh, this is the Bell TIFF building. This is where they have a lot of the TIFF stuff, this area here, the Toronto International Film Festival. As you can tell, it's kind of cold right now.
When late November, starting December next week.
Yeah. But anyways, folks, I think I'm gonna end this one. Keep these bite-sized, but just do your own research on it. But I mean, you're in Canada, kind of what's going on, and just kind of build your own mosaic, put all those factors in, and just be careful with those mortgage rates. Be careful how much debt you take on, because in the future, 5 years from now, with all the money that they repumped in, they may have to start raising rates again, right? So, and also Canada. Oh, I didn't mention this. That Canadians, we reached $3 trillion in debt. That's a new high as well. again, that's another thing for the Bank of Canada to think about. That you'd hope that Canadians would cut their debt levels, when rates come down, but instead they've just taken on more debt. So that's another thing to think about. But anyways, my name is Winston. I take walks. I'm based in Toronto. If you are a visitor, someone who's thinking about moving here, or you just enjoy watching it, hope you get something positive out of it. If you have any questions or comments, please post them below. Really appreciate you folks for watching. I have an economics background. I do enjoy talking about it. I didn't think anybody would like to listen, but I'm glad you guys do, and gals. And I will see you in the next walk. Thanks for walking.